Hello, it's Claire Coombs here. I'm delighted to session Climate Change as a Risk Multiplier of S&G in ESG. As many of you know, environmental, social and governance are three factors in measuring sustainability and ethical impact of a business or organisation, and it's increasingly becoming more of a stakeholders' assessment of the organisations in addition to financial aspects. They're often considered separately, but the impact of getting all three right can be phenomenal. We've got a really diverse panel who are looking at this from different perspectives today, and I think this is going to lead to a really interesting discussion. So, discussing environmental, we've got Gabrielle Durisch from Zurich. Now, Gabrielle, interestingly, has two roles at Zurich, as head of sustainability for commercial insurance that leads the strategic approach on sustainability for corporate customers, and also as head of CI claim strategy and analytics, where she's linking the climate change to potential losses. Discussing social, we've got Haydn Griffiths from Allianz. He's their Chief Information Security Officer and is responsible for IT, risk and security, including leading the prevention and resilience team for AGCS. This covers crisis management such as the current pandemic. And also discussing governance, we've got Stephen Licence from Legal & General. Stephen's a Chief Internal Auditor at Legal & General, having previously been an emerging markets Chief Internal Auditor at RSA Insurance. He's got 26 years of internal audit experience that covers life, general and healthcare insurance. So the panel is amazingly diverse from their points of view. Each panel member will be giving a short introduction into the area that they'll be discussing, and then we'll open to questions. So please have those questions coming through. So I'll start with Gabrielle on environmental. Gabrielle, how is Zurich considering environmental factors both internally and as an insurance provider to other businesses?
Sorry. Thanks, Claire. So at Zurich, we look at the environmental impact on in a number of areas. We look at what's changing environmentally, the physical impact, as was being discussed in the previous session, and also the impact coming from any transitional risk that we see when people are moving their operating model from a more carbon intense to a less carbon intense area. Or way of practice. And what I'm going to talk about is how, when we look at the environmental element of ES&G, how that can also link into the S&G, so the social and the governance piece, and go through a couple of examples, or at the end I'll go through an example of what we really, to try and simplify the topic and sort of bring it out so we can understand all aspects of how environmental can tie into this. So I think typically when we look at the environmental part of ES&G, there's a focus on the physical risk. So as was being discussed in the previous session, this is the physical impact of climate change on properties, supply chains, communities and customers. It's relatively easy to explain the increase in damage from storm surge that results in a 1 meter flood compared to a 50 centimeter flood. So this is talking about the impact that climate change could have on the potential loss from a natural hazard event. I think here there's an underlying impact on the social aspect, which often is not discussed or not brought to attention of our customers, except through sort of in-depth consultations that we run through our risk engineering services. So when you're looking at your workforce and you're looking at a weather event, can your workforce still make it to your building? If there's a fire, for example, is your payroll still going to be able to make it to the building to run the payroll to make sure that all your staff are being paid? And similarly, I think one of the assessments that we did was an earthquake assessment, so not typically related to climate change, but the same can be said for other weather events. When a Japanese company, their workforce couldn't actually get home. So they were then stuck in the building for a number of days. And the people operating the building had to work out where they should sleep, how they should feed them, and how they can sort of maintain a mini population stuck in the building because of a natural hazard event. So I think here, when you're looking at the environmental impact, you can link it to the social impact relatively quickly when you just start thinking about people and your workforce as people. I think the other thing around the physical risk when you're looking at society and your workforce is how can you protect your workforce from the changes that might be happening in the areas where you operate. So, for example, if there's increase in global temperatures, what does it mean for the general population in the areas where you have facilities? So will you see people moving away from these facilities or these areas as the temperature becomes warmer and it becomes more uncomfortable to live? Will you see people moving away because there's greater flood risk? And what does that mean to how you can staff your operations and what you can do as a business to ensure that communities are resilient to the changing climate? So that's very high level around the sort of social aspects of the physical risk associated with environmental changes. But we also look at the transition risk. So this makes it more complicated and expands the topic even further to potentially become more overwhelming. And what our role as an insurer is to help take out that overwhelming sort of feeling and engage in conversations to help understand the different elements of risk. So what do I mean by transition risk? This is the risk associated with the need to move to a low carbon world. We're seeing a fundamental shift in how businesses are operating as they develop the transition plans to green operations and try and limit global temperature change. We're looking at the potential impact of a carbon tax, for example, or policy changes when a government decides that emissions need to be reduced. Some of these decisions can happen relatively quickly, which mean that companies need to be ready to rapidly adapt to any type of change that might be going on. And then the knock-on effect is, what does that mean for their business and their operations? And then another topic that we look at is the potential increase in the cost of carbon offsets. So as more and more companies commit to a 1.5 degree future or the Paris Agreement, many are talking about paying for offsets. If the price of these offsets is adjusted and increases, then the cost clearly of the offsets is going to increase, and that could have a knock-on impact on their business. So when Zurich, when we're looking at the transition risk that we're exposed to or that our book might be exposed to, we look at the carbon intensity of our portfolio. So we look at where we have particularly carbon intense customers or industries that we insure, and then how much of our premium is actually with those businesses. So that gives us an indication of how much of our premium is with the companies and the customers that need to be making the biggest changes over the next few years. And then tying it back into the topic of the session, it's like, what do these changes mean to society or from a governance point of view? So taking a very narrow example, because the topic is pretty vast, if we're looking at a company that's trying to reduce their emissions, they may be looking to reduce energy use or raw material extraction. So perhaps they're moving towards a more circular economy model, which is sort of reusing and recycling materials rather than starting from scratch. Now, as they move to this type of model, they would need to be reskilling their employees. They would need to look at maybe relocating their operations to places where the supply chain is more beneficial if we're doing recycling and reuse. So they would be reskilling, relocating, and rebuilding. And I think as risk managers or as people who work closely with the C-suite or the boards of companies, it's our role to educate and bring this information, or bring an overview of these risks into the conversation and into the discussion, to make people aware of what needs to be changed, and what type of changes we can expect over the next 5, 10, 20 years. Now, if I bring this all together in an example, if you think of a processing facility by the coast, for example, if you're looking at the physical risk, so how is rising sea level or storm surge going to impact this property? And is climate change going to make that impact heavier? And then, can the workforce access the property? So this is what I mentioned at the beginning. Will they still be able to access it in 10 years' time? So when we look at the models that we're building to simulate the climate change and the sea level rise, we can see properties that almost become islands as the trunk roads and the access gets cut off, but the land that they're on might not necessarily be flooded, but they technically become an island. So if that happens to your building, if it's a short-term impact, can your employees work remotely? And I think something that Haydn's going to cover later on, as he talks about the emergency plans. And then more questions come. Can the workforce live comfortably in proximity to the facility? Are their houses going to become uninsurable because they're too close to the sea level, or there's coastal erosion? And then more on the operation side of your business, how do you source your raw materials, and will this change over time? And how will that then impact the way that you operate? And again, what does this mean for the skill set of your workers? And then finally, looking to Stephen, how do you report the progress against your sustainability targets, as there's more and more pressure for us to externally disclose what we're our sustainability ambitions, and what is the governance around this when we're talking about our carbon emissions, and how do we bring it all together? So how would you monitor the carbon emissions of that factory so you can report and follow the governance that's being put in place?
Thank you, Gabrielle. You're doing my job as moderator as well, so it's fantastic tying it all together. So moving on to Haydn, in terms of the social aspects, Haydn, I wonder if you could just expand how Allianz managed those operational aspects during the pandemic.
I can. So my background is an operational aspect. I'm classically involved in the information security, business continuity, crisis management for AGCNS, and as part of the Allianz family, that this year's been, let's say, quite a journey, as it's probably been for many of you globally. And I think the COVID situation has been, let's say, a great accelerator of change for societies, and it's going to remain that way. It's going to keep on driving things. So I'd like to give you just a few insights into how AGCNS has dealt with this year, and also how it's looking on the wider side of Allianz, and also some outlooks in the future, what we can see the effects are going to be on our staff and the way that we work moving forward, which I assume a lot of you are also looking into going forward. So when this all, let's say, kicked off back in, let's say, primarily February, March, the key thing was to keep our employees and our staff safe. We had the situation that we initially saw the pandemic coming up in offices that are located primarily in Asia. So this is, as you can see from the news, so looking at China, looking at Hong Kong, Singapore, and then we've seen as it's moved across the world. And the decision early in March was taken to send the vast majority of our staff into home office. Very new situation. I think in the UK, for instance, in UK offices, we had a certain percentage of staff who could work from home, and that worked fine up until now. But now we were really flicking a switch. We were really making a huge difference. And this was it's a question if this is going to work on a few levels. So first of all, we're going to be very reliant on our IT systems. So can IT support what we need to do? We'll be bringing processes into environments that essentially they were never designed to be running in. Were these business processes going to be able to keep on running, and were we able to deal with those? And also because at that time, I think partly still we've got a bit of a question mark when all this is going to be over. So when can we go back in again? Well, what does the new normal look like, and how are we working in that environment? So we had within AGCNS, in collaboration with our Allianz holding colleagues, we had a clear approach of how we, first of all, were going to ensure a coordinated approach, how we're going to ensure that everybody was still safe, everybody was still secure, and a particular focus on protecting our more risk colleagues. So we identified colleagues who could potentially fall into this category, and making sure that they were in the forefront of our minds. The other thing we were asking, and I think this has been one of the other significant things that we've observed, is that there's a social responsibility amongst the employees, both to ourselves, but also to one another and to our wider families. So by coming into the office or carrying out or having a site visit, we are in effect part of that mechanism of protecting. And we need to make sure that when we carry out these kind of activities, that we're doing them in a safe and secure way. And by doing that, it's also driven innovation. So innovation to look at new ways of carrying out site visits, questioning whether, for instance, it's necessary to actually physically meet somebody face to face. Could this be done virtually? So this comes back to driving innovation and change, and doing that in a secure way. At the same time, at some point over the year, and I guess the same as most of you, we had peaks and troughs with regards to the infection. So there's some points in the year, and if we look at the UK, and we're looking back towards the summer, we were able to start bringing some of our colleagues back into the office environment. So the question is, how do you bring back those people securely? How do you look at the people who need to be brought back in? This could be related to the processes that they're responsible for working on. This could also be related to maybe welfare or challenge issues that they've got working from home. I mean, not everybody has an ergonomic office environment set up in their home. It wasn't necessary up until now. So we've had to look at how do we do that? How do we bring people back in? How do we keep the social distancing measures in place that are being required from regulators, from authorities, in order to make sure that we're compliant with this, and to make sure that, again, that our colleagues are running safe. So we've had to deal with those challenges. As a global company, we've obviously got the global footprint. We've got also the added challenge that we've got multiple OEs, operating entities of Allianz, in one building. So classically, up until now, many of these operating entities worked quite separately with regards to their processes and their setups. All of a sudden, we've had to come together. We've really had to work as a global company, and at Allianz, we've achieved that. But those kind of challenges were there at the beginning, and over the last few months, we've had to work through that and bringing everybody back together. So they were some of the, let's say, the parameters we've had to work in over the last few months, and of course it keeps changing. If we look at also, there's been some changes in maybe the behaviour, the recruiting, the turnover of staff, that I think is, looking at AGCNS and Allianz, obviously it's relevant for the insurance industry and what we do, but I think it's probably got a wider context. And it shows the developments of what technological change and crisis can have on the working market, and where people are located, what people do, maybe the risks they're willing to take with their career at particular times. What we saw was a dramatic drop in the staff turnover for most of the last few months. that we were in the lockdown situation, and this wasn't just in the UK, but this was also globally. We're seeing that there were people who were, let's say, their priorities maybe have changed. They were probably very glad to be working for a large insurance company where there's that feeling of stability. We also saw that the recruiting side, so external recruiters, had to reduce some of their activities as well. So this kind of pull out to other organizations was also subsiding. So we've had some changes in that area. We've also seen that if we're looking at training, if we're looking at awareness, if we're looking at investing in people, a lot of the activities that we did previously face-to-face, sending people around the globe to have these meetings, to have these interactions, all these things, as we're doing today, were being done and still are being done virtually. I think there's a high likelihood that a substantial proportion of these interactions and what we see today will continue to work in that virtual mode, and it makes the company as a whole a lot more effective in its global footprint, and allows us to better collaborate and work together. I think that's a key lesson learned. If we're looking else, also the well-being of our staff was very important. We've got to make sure there's a lot of maybe physical stress being put on people. There's mental stress being put on people. How do we deal with that? Everybody's got a different situation. We've got to make sure that people are happy in what they're doing, that they're also productive, and also remain active during these periods. So there's a need for us to interact and be a part of that as well. Looking ahead, we've obviously got the vaccine on the horizon. I think in the UK, I'm based in Munich, I'm based in Germany. We're still waiting for us to get our approvals to have vaccines. You guys in the UK, I know you already have that, and people are already being vaccinated. But this is part of the light of the tunnel. So what does this mean to changing these? Does it mean we go back to where we were before? I think the indications are probably not. There will be a new way of working. People have found new benefits in the way that we're working. I think there is a longing for some parts of that previous working ethic and that office environment, and I'm sure that those will come through again. But I think that we're going to make a change here, and this is what we're already seeing within Allianz, where Allianz has already made a commitment to moving 40% of the time that we spend with Allianz into a home office permanently going forward. And we're already in the process of putting that in place across the globe, across all operating entities. And that's very much welcome from our colleagues. So with that, at the same time, and linking into what Steve's going to present, we've also got to make sure at the same time that we fit and all into all the regulatory and governance requirements that are necessary for a financial institution. And that brings challenges with it as well. We've got people maybe working from home. We've got data protection issues that maybe we didn't have before. All those kind of questions, information security, have also got to be addressed. So it's going to be an interesting future we're looking at.
So that's a great handover to Stephen. So we're getting some questions coming through, but Stephen, governance then. So, why are legal and general particularly focused on governance and internal audit? What is your role in that aspect of the ESG?
Yeah, good afternoon, and thank you, Claire, and thank you to the organisers for inviting me as well. It's a great question, and I do feel I need to explain myself a little bit about why I'm dressed in a suit and got a tie on when we're in the middle of a pandemic. Well, I attended the group's risk committee today, so we've already decided that we would have some of our meetings, some of our core governance meeting. There is a connection to governance. Face to face, because we think there's some extra value in some of the physical interaction, even if we do have to be socially distanced. It's part of our way of getting back to some kind of new normality. But yeah, so just in terms of a little bit of background, so in terms of third line of defence is my perspective, and thank you for reminding me. I've been doing this for 26 years, so seen a few changes in that time. And also from the perspective of the organisation, and I have to say it's great, really genuinely great to be sharing the panel with Allianz and Zurich. I'm pretty sure both of you could have said exactly the same thing that I'm going to say, because fundamentally, just stepping back, insurance genuinely is a force for good. What we do for our customers, what we do potentially for society, what we do for our economies, we're fundamentally set up to bring about improvements to everybody if we choose to do that. And I'm very fortunate to work for Legal & General, who has very clearly put that at the forefront of its agenda, as has Allianz and Zurich as well. But this isn't a new concept. The concept of ESG, in particular the concept of governance. If you go back a little bit in history, insurance businesses, life insurance, pensions businesses have been investing in society for many years. So I guess it comes to the question, well, what's so important now, and what fundamentally has changed? Well, I think linking the three topics together is really quite interesting. The environmental impact, the social impact, and overall governance, and what organisations do to the wider economic and political structures is really quite important. And Legal & General in particular has adopted and been very vocal about being an advocate of being inclusive capitalists. We see our role as not just, as I say, making money for our shareholders, but also using that vast wealth of capital that we have at our disposal for social good, and that really does apply to all major insurers as well. But looking at it very specifically at the Legal & General, through the Legal & General lens, just to give you some perspective, as a large asset manager and having an enormous balance sheet, we have to put those assets to use ourselves. So we have to look at the environmental impact on our construction projects and our building projects, and really have a view of how those projects are impacting both climate change, both society and that, because the things that we do are big, and therefore we affect society when we decide to build new offices or build new factories or build infrastructure, and we need to have very much in mind what the impact of that will be on those societies and those communities. So it's a really important factor that we need to take into account. And to give you some kind of context, that we invest over £90 billion of our pension funds assets in other people, in other organisations. And we want them to be successful so that we can pay our future pensions and give society, and particularly the ageing population, the financial security that they need to be in society where we're all living that little bit longer, which is good. So as well as that £90 billion of our own assets to invest, we also look after approximately £1.2 trillion of other people's money. And that's where the rubber hits the road, because all of those customers and all of that money needs to be invested. And those customers are asking us to make sure that we don't lose it, or we don't see it devalued. So much of the work of our asset manager is making sure that we influence other organisations to do the right thing. So the impact of climate change on those businesses is taken seriously, so it doesn't devalue their businesses in the long term. It's in none of our interest to ignore that risk if it means that some of those businesses may go to the wall or be unsuccessful. So that's really the bit around the group. It's our impact on society, it's the impact on our customers, and it's the impact on our people. And I guess the question, well, why now? Well, there has been a cultural shift. Whether it be the acceptance of climate change or not acceptance of climate change as a global issue. It's something that you just cannot ignore anymore. Society and investors and customers are incredibly interested in terms of what you do and what you do with their money and what you're doing on their behalf. And our people are equally important in that equation. Our people make choices now about what organisations they want to work for based on their impact on climate, their impact on society, and what their credentials are for doing good. So there's overwhelming reasons why this is a significant topic and a significant risk, because if we don't get it right, we won't be successful going forward. And just to give you a bit of a flavour of what that means in practice, I mean, the Legal and General Group has made the commitment to align our balance sheet with the Paris objective. And that is no mean feat when you have £1.2 trillion of other people's money and £90 billion of your own assets. We've committed to giving over 5% of our capital to clean energy projects. So again, looking for opportunities to contribute to the climate change agenda, as well as an opportunity to provide sufficient returns for our pensioners. And also we've made commitments around making sure our homes that we build and the factories and the infrastructure that we're involved in becomes net zero carbon emissions by 2030. And those commitments are huge and are going to take some significant work and some significant monitoring, which is kind of where we come into this to some extent. But kind of moving a little bit to the G, I've kind of probably taken a bit too much of the E and the S, but the G agenda is a genuinely interesting one. And when I was reflecting on it, it's like, well, why now? Why corporate governance in this this equation? Well, it links back to the other two very, very clearly. Making commitments is very easy. Making sure they actually happen is far more difficult. And there's just been lots and lots of examples of where organisations have made very big commitments to do things and have failed miserably. And therefore, there's a lot more interest now in how boards conduct themselves. What's the construct of those boards? What does the governance structure look like? And what's acceptable and what isn't acceptable? The whole topic of executive pay and remuneration is incredibly sensitive now. I mean, some of the examples more recently, I mean, obviously in a private company, but the Arcadia Group is going through, a significant challenge, and obviously some of the focus has gone on its previous owners and how they remunerated themselves and rewarded themselves. Society is less forgiving now for corporate greed or reward that isn't backed by making promises and making commitments to employees and society more generally.
I'm very conscious that we've got some questions coming through, and you've all really linked nicely with each other in there, so it's quite difficult to know where to start. But we're talking through everything about change. So corporate governance not known for its speed of change. Gabrielle, you mentioned about the transitional exposure. How do people go around thinking about that? Haydn, you've talked about, is there a new way of working? Is there a new normal? So if I could start with Gabrielle, thinking about the transition, and maybe the rest of you chipping in on the change in this area.
Thanks, Claire. So I mentioned it very briefly. The way that we're looking at our transition risk is we're looking at the carbon intensity of our customers and industries in general. So we take the emissions. There's a big question over whether you take all three scopes of emissions, or if you're looking at portfolio, you should just take scope 1 or scope 1 and 2 to avoid double counting. So if we're picking up the emissions of our customer, but also everything from their products, when someone uses one of their products, the emissions from that. So if you think about an oil company, their scope 3 emissions would be very high because it would be the people using the oil, and that would be releasing the emissions. But if you're looking at the whole portfolio, we could be picking up customers using that oil, and therefore double counting the emissions related to that product. So we're looking, going a bit down a foxhole here, but so we look at the emissions and we look at the revenue of the company to understand the carbon intensity, and then we look at that as a proportion of our book. And there are some surprises where we have companies that have a small amount of revenue, or a small amount of premium, but they have a very high contribution to our carbon footprint. And then we would need to do more analysis on those companies. We look at the publicly available information about what they're planning to change, compare it to the industry. It's very early days in the work that we're doing, but the idea would be that we compare it to the best in class in the industry. And what we want to do at Zurich is support the transition, so help our customers understand what needs to be done, maybe what peers are doing, maybe what's best practice, and then understand how our products can support that and help them make the changes that need to be changed.
So I think that links really nicely to a question that's come in, which is directed at you, Haydn, which is, have you found that Allianz's move to home working for employee has actually positively impacted your carbon footprint?
Absolutely. So one of the major changes this year has been the dramatic drop in travel. So as a global company, previously there was a very high level of travel going on. That has obviously fallen away. But we've learned to be able to operate and function without having that level of travel. And I'm expecting, and it's one of the targets now that we've set within Allianz, to keep that travel down. So we've learned how to do this, and we're going to keep on doing it. The other element is to do with our office footprints. So as I mentioned before, we're reducing the amount of presence time that is expected for the colleagues to be in office. Now, just a logical consequence of that is the question, well, do you need offices on the same scale as you needed them before? And I think then the logical answer to that one is, well, probably not. So at the moment, we're going through the process of evaluating where do we have opportunities to reduce our footprint there. Also looking at the commuting. So travel, as I mentioned before, this is about traveling to customers, to brokers, but also the daily commute. So with 40% of our colleagues in home office going forward, we're dramatically driving that down as well. So there are lots and lots of elements coming together here. And for Allianz, the carbon footprint and our sustainability is a very important thing that we've been looking at for years. So this is now giving us the opportunity to even further and more quickly accelerate those elements that we believe are the right thing to do. So super opportunity.
And so, Stephen, how do you think these sort of changes are going to be captured in reporting going forward? As I said before, governance seems to be behind everything else, but this is a leading change. How do you think we're going to capture and present that?
Yeah, I think I'd pick up on a point that Gabrielle made, really, which is a lot of this is about modelling. And in our industry, there's an awful lot of models, and we know from history that sometimes they can be slightly unreliable. And when people are placing reliance on that to make either financial decisions or moral decisions or any other kind of decisions, we need to have some kind of comfort that those models are actually reasonably accurate. And that's one of the key roles for the third line going forward, was these models that are now projecting, the impact of climate change on the value of assets. Well, how good are they? People are genuinely making billion-pound transactions, decisions made on that. This data needs to be pretty well documented. The models need to be well understood. And when and this is part of the transition, is being able to accurately report movements and changes, and being able to be held accountable for those statements and the results of those modelings.
And I think we've all touched on the social aspects here. So with multiple global organisations operating in multiple countries, how are you monitoring the welfare of your employees and whether they can get to work, as Gabrielle says, and how are we supporting those? How do you see that working in the future? That's an open question to whoever wants to take it.
So shall I'll jump in with that one, maybe start off with. Again, very good and important question. There's a lot of change going on, and obviously in the current situation, in the pandemic situation we're currently in, there's a lot of, let's say, external stress that leads to maybe staff, employees not being at the right level of happiness, let's put it that way. So the welfare may be an aspect of that. But going forward, I think it's going to be one of the key things of employer to measure how people are coping, for instance, with working remotely. Now, if we were gauging that through surveys, so understanding employees, how are you coping with things? Are there things that we need to improve? I think it's then also the fact of being able to quickly get changes in place in order to improve the situation for those colleagues. So, for instance, what we've done in AGCS, we've changed our IT setup. So looking at where we're going towards and looking at what we're going to do, we've changed the workplace IT offerings, and they're customed to that remote working going forward. So it's being able to listen, it's being able to come up with a plan, and then reacting timely to those demands. And globally, again, it's going to be slightly different from one place to the next. You know, in the UK, we'll have certain demands and concerns, but then if we look over towards maybe the colleagues in the US or looking out to Singapore, it's different again. And some of these are driven by the authorities there and what they require. Some of them are being, if we look at Spain, for instance, who have a royal decree that people get reimbursed for certain things. So there's all kinds of factors playing in there that mean we've got to be very responsive, lots of options to make this work. Again, it's going to be an interesting time going forward.
So I'm just thinking about, we talked about all the positives of ESG and how we integrate those, but what about companies who maybe aren't doing this as seriously? How's that going to impact? Gabrielle, do you think insurers will look at companies differently if they are not really investing in this area?
Well, it is a good question, and I think we've come across it in discussions that we're having. So there are some companies that are very well advanced in the whole approach to sustainability and climate change, and then there are others that are just beginning the journey, and there are some that still don't believe that climate change is an issue. So I think as we approach customers and we understand where they are on the scale, we would tailor our approach for the discussions. And I think as an insurer, we have some level of influence that we can exert to help people understand that it is an issue. I think as we're moving forward, so putting on my claims hat, we're going to have more and more to support our concerns. So we'll have more actual, real evidence to support our concerns. And because we see the impact on a global basis, we can leverage the knowledge and the insight that we have to inform and educate and influence going forward. So hopefully, I think probably everyone will agree that the topic of sustainability seems to have been relatively quiet until the past couple of years, where it's exploded out there, and it's only a good thing that more and more companies are getting on board.
Yeah, so if I absolutely agree. I think our industry can play a very pivotal role in this agenda, and quite rightly so as well, going back to what I said about us being a force for good. I think we speaking for Legal and General, we've already said that we will vote down remuneration committee chairs if they don't have BAME representation on their boards. And for anybody sitting on a board with Legal and General as one of its shareholders, that is a concern if you choose to ignore the social agenda and the governance agenda that we think is the right thing to do. So I think we have already made as an industry commitments around this, and we will be held accountable ourselves if we don't. So I think we have a moral obligation to make sure we don't let up on this agenda.
So thank you all. We're in our last minute of this session. So I think what we've talked about has shown how ESG is so important, and more importantly, how you can link it all together, and you can't really consider one in isolation. So I'd like to thank you all on the panel for that insight. I'm sure we could have talked all day, And I'm sure we will at some point about this, but thank you very, very much for joining us in this panel discussion.